Okay, well, Dean Kim is head of global research product at William O'Neill. Is joining us right now. Dean, good to have you with us here. Thank you very much for your time. How are things looking, Dean? And let's just start with indices, right? And I think I posed the question on small caps and mid cap indices there to you. So let's just begin there. I mean, the Indian small cap indexes have been pointing out perhaps the best performing asset class in the world this year. Is it looking good for more? We've just, by the way, on the small cap index, broken out of all-time highs a few days back. So what does it do from here?
Yeah, I mean, what we've noticed for quite a while is actually the small cap in India, the relative strength is very high. So in fact, it's higher than large cap. And when we took notice of that many months ago, we were looking into it and found out that it is indeed the small caps that's garnering a lot of outperformance. And I did notice today that on the tech side, there are a lot of companies that's kind of extended. So just name a few: Persistent Systems, Scient, LNT Technology, and so on. Those stocks are, I would say, 40 to 50% above the 200-day moving average. So if you hold those, I would say continue to hold it. But once you see signs that it's kind of, starting to break down, for example, if it breaks below the 21-day moving average and it fails to hold support at the 50-day moving average, then I would say it's time to start trimming. But, certainly looks very good for now. So I would continue to hold.
Okay, would continue to hold in the Nifty ID index. I mean, the index itself is at a fresh 52-week high. Before we move forward, anything specific in the IT index that you like? Because there are plenty of stocks, right? HCL Tech, there is Scient, Persistent, Emphasis, all at fresh highs. What would your pick of the pack be?
Yeah, the Tata Consultancy, that's reclaimed a 50-day moving average. That actually looks pretty constructive. It's on the right side of the base, and it's gaining a lot of accumulation. So I think it's time to start looking at these types of names. And even Infosys, it's reclaimed a 200-day moving average. It's got to go through some consolidation. Let's see if it can hold that 200-day moving average. But I think the large cap IT sector is starting to improve. It's looking fairly constructive. That's on the heels of global stocks like Cognizant or SAP. They're all looking pretty good at the moment. And of course, in the US, the tech sector is doing really well. In fact, tech and energy sectors are the only two that's sort of outperformed today, while everything else kind of faded. So perhaps it's time to, start looking at these two names.
Hi, Dean. Good morning. Just circling back to the global setup then. I was looking at it in this current meeting, that's a September meet. The most of the street is factoring that we don't get a rate hike. But in November, there's still a 35-36% probability. Do you think there's one more rate hike? Maybe not this time, but maybe in the next couple of meetings, we do get a couple of more rate hikes?
Yeah, that is the key question. Right now, on one hand, I think the market does expect one more rate hike and then probably hold after that. But as you mentioned, one of the Fed governor commented that perhaps it's time to, hold position here. And when you look at the data, like the job numbers that came out, I think a couple of weeks ago, it was much weaker than expected. And then we have conflicting data in terms of jobless numbers that came out last week. They were a lot lower than expected. So we still have some conflicting data, but one thing is true: inflation is coming down, and I would take hold of the fact that the job creation numbers are starting to slow, and when you pair that with the action today in terms of retail, staples, and healthcare sectors all underperforming, and then small caps starting to underperform. I think it wouldn't be surprising to me that if the Fed holds in the September meeting, but at the same time, we can't ignore the fact that the market does expect one more rate hike.
There are a couple of stocks that have been big performers this year. One of them is LNT, which is up over 30%. And the other one is Starter Motors, which is up almost 60% this year. Do you see follow-on buying in either of these names, and do you like them on the charts?
Yeah, they are a bit extended. If I were to create a new position, I wouldn't, take on those two names. If you do hold it, continue to hold it. There's nothing wrong with the chart as we see it. However, it is vulnerable, and as I've said, if it does break below the 21-day moving average, you should pay attention and then start to trim below the 50. So that's always been our rule in terms of our methodology. We don't do anything with good performing stocks. It's not until they start to falter. So I would just, keep an eye on those two.
All right, Dean, we'll leave it there. Thank you very much for joining us. And it's always a pleasure having you with us here on CNBC TV 18. Well, we'll